Hello and welcome to Money Control. Well, continuing with our conversation series this Diwali, I have a very special guest, Dhiraj Relli, MD and CEO of HDFC Securities. He's going to talk to us about investor experience last year. How has the markets been? How have the markets been? How has investor experience been? How has the broking industry shaped up and what we should expect in the coming year? Thank you so much, Dhiraj, for joining me on this discussion today.
Thank you for having me. It's my pleasure.
So first of all, this is the first question I am asking everybody because last year feels like the headline indices did nothing, but the markets went all over the place. We saw so much fear on the street in March and so much greed in the mid-cap rally that followed. Tell us from your prism, how has last year been for you at HDFC Securities, for the broking industry, for investors who trade on your platform? Take us through the last year.
I think we have had a wonderful year in as Sambat, last Sambat to this Sambat. Uh, Particularly last 6 months and last quarter have been really good for us. When I look at my H1 to H1 number, like for current fiscal with the last fiscal, our revenues have increased by 22%. Our turnover has increased by 129%. So we are in a happy space. We've done well in this period. Coming back to the markets, I think markets have also done well in this period. You have to look at market from a very different lens. If you look at just the Nifty performance, you may get only 9.5 to 10% kind of a growth or an upside. But if you look at from the lens of the mid cap and small cap, you will see that customers have got good 30% to 34% return in the mid and small cap. In fact, PSU's bank stock index has given 34% return. The only, I think, the spoiler was oil and gas sector where we've got negative returns. So mid cap and small caps have given decent returns, more than decent returns to the investors who have stayed invested. Of course, we have our own bouts of volatility in this period, and the volatility is something we like as brokerage house. So that helps us to add value to our customers and play a significant role. More than the business performance, I think what we are really happy that we could able to launch in the last quarter HDFC SKY all-in-one application. This is a new age, cutting-edge platform whereby customers can invest into equities, derivatives, currency, commodities, global investing, ETFs, mutual funds in one application. And that too, it comes with a very simple and transparent pricing of 20 rupees per order. So we are very happy that we could able to launch something that can change the landscape and the whole ecosystem of the broking in years to come. So this year has been a good year for us so far.
Fantastic. Tell me more about your business. You mentioned that you saw a more than 100% growth in turnover, but 20% or something thereabouts in terms of profits. So why is that? Why is there such a huge gap?
Our industry have been going through a significant disruption on the pricing side. You are well aware that discount brokers have taken a larger share in terms of number of active users when we look at and compare it with the traditional brokerage houses. So to that extent, the volumes have gone up, but the margins have been under tremendous pressure. That's why. And also our expenses were a little bit on the higher side because we are investing disproportionately higher resources on improving our technology, digital ecosystem, and getting future ready. And we put in some money on the marketing expenditure as well. So that's how the revenues and the bottom line have not grown in line with the turnover. We also have various other businesses also, like we do offer margin trade facility. There our book has grown in last 6 months about 80% or so. We also distribute mutual funds, insurance, and some of the other products to ensure that we add value to our customers and we give them a right asset allocation. So that's where also we have seen a significant growth. So on and all, when I look at it, I think it's been a fulfilling year for us, and a lot more to come.
Sure. And do you see this optimism or participation, more importantly, participation in the derivatives market to continue. SEBI put out this study saying that 89% of individual investors don't make money in the markets. Obviously this means that amongst individual investors there are a lot of unhappy experiences and accidents that may be happening. Do you see on the back of this participation to continue, or is there some point at which there could be some kind of deterrence you could see?
The outcome of the study was an eye opener for the entire industry and for the investors as well. They could able to come to the terms that most of the customers are not able to make money in the derivative space, and it's 9 out of 10 customers are actually not making money. That is what study substantiated. So to that extent, it is a bit of a eye opener and a dampener, but I don't see this as a big setback to the industry at large. Not so for us, because we have more or less large number of investors who look for a midterm and short term, and we never had a large share in the derivative segment. But coming back to the industry at large, I think there is some kind of an awareness is there. But now people have realized that they need to play better. They need to have their own trading strategies. They need to have risk management in place in terms of stop loss, and they need to take as only as much as risk as much they can lose. So to that extent, yes, it has its own impact, but we are yet to see any impact on the turnover. To that extent, we are seeing more and more new customers are coming and participating in the market. A lot of work to be done by industry at large, including the exchanges and SEBI, to educate the customer. I think this is just one of the first few steps that have been taken to enlighten the investors to take an appropriate risk when they are looking at investing into the FNO space.
Okay, so so far, obviously, the overall turnover doesn't suggest that this result of the study has really dampened sentiment in any way. The turnover continues to grow. What is the industry doing, or what is it that the industry can do to better outcomes at all? Is there some thought that you as a broking house or the industry is mulling over?
I think the first and foremost, what we need to do is to create more and more awareness among the investors, help them to understand that when they are transacting in the markets, there are higher risk in certain segments, particularly in the derivative space. So we need to create that awareness and educate them. In HDFC Sky, we have put a Sky Learn platform, which helps them to go through the videos, that too in multilingual videos, so that they can understand nuances of the market and they can understand the risk management. We also do multiple webinars, customer engagements. We also assign relationship managers to our customers who proactively guide them. I think the most important thing is that we need to have an ecosystem where customers are educated to do their own research. They have their own trading strategies, and they have their own risk management and stop losses in place. That is something very very critical. And I think now investors after dabbling in the market on their own are also looking forward for a credible research houses like HDFC Securities, and they are following our research to take the calibrated calls in the market. What I would humbly request all the investors in the market is to educate themselves, to learn about the markets before they start taking the bigger bets in the markets, particularly in the FNO space.
Sure, Dheeraj. One question on this finfluencer space. Obviously, in the post-pandemic era, finfluencers have played a huge role in, at least increasing awareness about derivatives. But along with it has also come a lot of abuse, right? Now, SEBI has put out this consultation paper that they're not going to allow regulated entities to engage with unregulated entities or unregistered investment advisors. What do you think will be the impact of this on onboarding of new customers or expanding the customer base and volumes?
In our country, we do not teach basics of finance and basics of investing in our academics. So, to that extent, the new investors do need to rely on some source to update themselves and get more incremental information for informed decision making. To that extent, they can reach out their respective brokers, or brokers can play an active role, and also influencers. Uh, I think influencers have to, by and large, played a critical role, important role to expand the market. But as we say, anything that goes unabated, unrestrained, and no regulations around it, things can go wrong. Also, we've seen that happening in the multiple other asset classes also, and other businesses also. So it is not only confining it to the business in of banking or financial services or broking. It is also a widespread phenomena whereby people are swayed by the influencers, and they follow the influencers and end up losing money or doing wrong or taking wrong decisions. So to that extent, I think SEBI, this step of SEBI is in right direction. We need to regulate the influencers. We need to ensure that they are registered with the SEBI. All that SEBI is asking, if you want to act as an influencer, you have to be registered with SEBI, so that there has to be some regulated ecosystem for you, and as well as there has to be some accountability on what you are communicating to the prospective investors and so on. See, it was misused, and largely misused to make their own individual gains. To that extent, I think regulation is a welcome step.
Fair enough. And Dheeraj, in terms of addressing the needs of the new audience, the younger investors, the retail investors, is there anything that HDFC Securities is doing differently in terms of matching customer expectations? Any new kind of experiences? For example, Zerodha earlier used to talk about nudge. I think Samco has developed some features on the app which are also quite interesting. Anything that you have done?
So we have introduced many new features in our multiple platforms. We have in our full service platform, Invest Right platform, where you can go for a hyper personalization, multiple watch list, and option interest, and so on. So there is a plethora of features that can help them to take the informed decisions. But more than that, I think the research recommendations that we offer to all our customers free of cost, both on technical and fundamental space. I think that is a significant value add in informed decision making. As I told you, that look, in the mid caps have given almost 30% returns, and in the last summer, and small caps have given 34% kind of return, whereas oil and gas sector particularly was negative, has given negative returns. Now, stock selection and decision becomes very, very critical for the customers. And once you take a decision, are you able to optimize your portfolio or not? So features like portfolio optimizers, regularly helping customers to engage with them proactively and help them to optimize their portfolio, is very, very critical. In HDFC Sky, we have a feature of tag. You can tag your investments to a particular goal. Let's say you want to park your investment for a foreign travel, or you want to park your investment for a short term, you want to park your investment for a long term. You can tag them, and that tagging feature is there, which helps them to create multiple goals.
Sure. Dheeraj, one last question. Discount brokers have really taken away a lion's share of the market of the broking business, uh, obviously because of their model. Do you see, now that you've also launched the app, obviously you're trying to disrupt the disruptor, as you said earlier. Do you see the traditional players taking away some share, or is there a way for the competition dynamics to change in this industry?
The competition dynamics in the industry, broking industry, has changed in last 5 7 years. We have seen the significant emergence of discount brokerage houses, and discount brokerage houses have taken a large share in the market in terms of an incremental customers. They have added more number of customers. They've expanded the market significantly. So full credit to them on that space. And I think they will continue to have a larger share in the market when it comes to the number of investors they serve. But there are a set of customers in the top of the pyramid, in the middle of the pyramid, like, who would require investment advisory, who would require more hand holding, who would require more personalized asset allocation strategy. There, I think the full service brokerage houses will continue to play their role. So my take is that you cannot have a one size fit all solution for in all types of the investors, and different genre and different segments of investors have their different aspirations, requirements, and needs, and accordingly they need different platforms. So we believe that at HDFC Securities, now with HDFC Sky, we have filled that void. Earlier we were not catering to the customers who were looking at do it yourself platform only and low cost platform to invest. We were proactively engaging with customers through our relationship managers and through our digital platforms, and adding significant value to them. But we could do this only to certain segments of the customers only, and not to the scale. So what we were missing was scale. I think HDFC Sky should help us to get the scale. Coming back to the broking industry at large, I think uh, full service brokerage houses and discount brokerage houses will continue and coexist, whereas larger number of investors will remain still with the discount brokerage houses.
Sure. One last question. What is your expectation for Samba 2080?
I think it's a very tricky question, because currently we are in a times where we have multiple headwinds in the form of high inflation, geopolitical issues. Many war fronts have opened very recently. Israel and Hamas one. India is going through a general election. In this month alone, we have a state elections. So if I have to describe this next 6 months to 1 year's time, I think it will be very volatile. We will see bouts of volatility, and it would be quite we may have few very nerve breaking days as well in this period. So one cannot expect a significant higher growth, though Indian GDP growth is poised to be the best in the world, and maybe amongst the large economies we will continue to be an outlier. But we cannot decouple ourselves completely from the rest of the world. We'll have to see the geopolitical, we have to respond to the geopolitical issues and so on. So what I believe, that we will have lots of volatility in this year. But having said that, we still like many domestic facing businesses, and to that extent we believe that this will be a year again for a stock selective approach, and not looking at the market at large. And that if investors follow asset allocation strategy, and also be very stock selective, and follow our research, high quality research, they'll be able to make good decent double digit returns.
Sure. Thank you so much, Dhiraj. Wish you and everyone at HDFC Securities a very, very happy Diwali. Thank you so much.
Thank you, and happy Diwali to you and your viewers. I think the diyas and the brightness of this Diwali can bring in a lot of peace, prosperity, and sanity in the world. So happy Diwali to you and your viewers.